Hi, John. I'm back. Hopefully, you can still hear me. Uh, in my haste to get the new invitation out, apparently I typed 9 a.m. So that's 9 a.m. instead of 10 a.m. So it is. All right. So it's a great morning. Well, I know Craig's about to hop on. Oh, Russ is going to hop on. But while it's just me and you, why don't you just tell me a little bit about your business, man?
Still relatively new. I got back into real estate in 2017 with my first property. Bought it through New Western and learned a few things the hard way. Had to finish the house myself because contractors couldn't get it finished, and then they walked out on me. And I'm on my fourth house now. I got it in Ennis. Hopefully I have it wrapped up in the next week and a half. I have a full-time job that feeds the family, and I'm trying to get back into real estate. That's something I want to do for long-term goals and for retirement, because I figure 401k or not a whole lot in the 401k, and I figure Social Security is not going to pay the bills, sometime later on. 51 years old, so I got a little bit of time. Figure 14, 15
Right.
years, get 15 to 20 rental properties.
Right on. That one that you got going in Ennis right now, is that a flip or is that a rental? What are you going to do with it?
It's a flip. Everything I'm doing right now is flipping, trying to get cash so I can hang on to something. I do have one rental.
Right.
Kept my first house in 2014 when we moved from Glen Heights to Red Oak, and it's had the same tenant in it for 5 years.
That's always nice.
So my
cool, man.
Not bad.
Do what?
So my first landlording experience hasn't been too bad.
What do you do full time?
I manage digital X-ray systems for a medical company called Concentra.
Okay. Sounds a lot more complicated than my full-time job. Managing digital X-ray systems. Well, cool, man. I'm glad to have you on board. I think that is Craig that probably logged on.
How you doing, Tim?
Hey, is that Craig?
It is. How you doing?
Good, man. Good. Just, I was just telling John, who's on the line, that I had these cool, fancy automations set up that were supposed to kind of send everyone the updated invitations, and it appears as if I did it completely wrong. And the cool thing about that is I trusted the technology, so I didn't even double check it. And now it seems like nobody got the call invite for this morning, so that's awesome. It's a great way to start out with a bunch of new members too, right? But hey, it is what it is.
Look, well, I'm glad to be on and glad to be part of the group. So
yeah, man.
Yeah.
Well, I was just John is a new member, and I was just kind of having him tell me a little bit about himself and stuff.
Sure.
I've got just a bunch of stuff to talk about, but why don't I let you start so I don't dominate the entire conversation?
Sure. I mean, for me, I'm Craig Foster. I've been doing real estate investing, mostly all rentals, since maybe 2001. Got into the game a lot more seriously around 2007, 2008 when the mortgage crisis hit, and since have kind of sold some, bought some, tried new markets, tried new, property types and locations and things like that. And I tend to be just a buy and hold guy. And, that's worked out well for me. Just buying and holding and then refinancing and then using the proceeds to go buy new. properties. And so I've got some in Dallas, some in Fort Worth, I think one in Houston, some in Temple and Copper's Cove. And, my most recent one, I'm looking at one in Copper's Cove right now. It's about a 1,600 square foot place. That's 3-2. It's remodeled. It's got foundation issues, but gosh, I think I'll probably rent for about $1,000. And so it's the market there is real cheap. And anyway, so I've got it under contract for $84,000, and it's like entirely remodeled. So just I try and hit a bunch of singles and not a bunch of home runs. If I get a double, that's fantastic. But I'm just trying to grow as much as I can.
Right on. So interesting question. So you said you kind of started off with buy and hold and everything. So I would imagine you had or have a day job at that time when you first kind of got started.
I absolutely did. And I had a day job until about 2 to 3 years ago. And, at that point in time, I felt like I could do it just without a day job. But it took that long to accumulate that much in order to be able to do it. And still I watch, the expenses tightly. So I essentially just really spend a lot of time on scouring deals. And, that takes up a good portion of my time. But my goal is to do about 5 to 10 rentals a year. And I feel like if I can do that, then that will, but I have to buy them right? So if I use that formula, then that makes sense. But I've got to buy them right. And so that's the biggest factor that I have. And they've got to be in good areas that are going to see growth long term, which fortunately, if you do that in the Texas Triangle, you're probably going to be okay.
Right. So are you mainly looking at cash flow right now, or are you looking at is it kind of the long-term growth and the cash flow? Like, what's your primary driver?
It's really both. What I really like is anything that can rent for $1,300 and below. It's so hard to find. Good quality assets that are $1,300 and below, and because I know if you do the math and somebody has most of these towns within the Texas Triangle or any city, the average household is going to make, call it $50,000. And so if that's the case, then people can afford, right at, $1,400, $1,500 in terms of rent. So, you have some upside in rents if need be. And looking at the top line growth, and if it's like a pro business town and things like that. So,
right.
Yeah. And so it's not real sexy. It's real standard. And that's really kind of the way I look at it.
Right.
Yeah. So I feel like if I could get into them below, if I can get into them around $100,000, then I feel like they're the type of properties in 3 to 5 years that can go up to 150 pretty easily.
Right. Yeah. And how? I'm asking this question mainly for John's benefit, because he's in that kind of, I don't know how long you were on the call, but he's in that kind of
the build stage.
He's ready to do it, but his goal is to get to where he's flipping. I mean, keeping rentals, but right now he's flipping for cash while he's got a day job. Kind of. You said your goals, is it 4 or 5 rentals this year? Is that what you said?
Yeah, it's 5 to 10 generally.
5 to 10. And how are you buying how were you buying those originally when you were still had the day job, and how are you buying those now?
Yeah, that's a great question. So I was buying those before one by one, and I'd scour.
No, I mean like cash. I mean hard money.
Oh yeah. In terms of financing, so I was mainly doing them with bank loans and long-term bank loans, and I would go one by one and get a bank loan, and if I found a really good financing source, I would pool a bunch of them together and refinance them, and I kind of slugged it out. What's changed between then and now is I think financing, there's more available single-family rental financing options. You know, Tim put me into a contact from, with a lender that I feel like is definitely a pro SFR lender, single-family rental lender. Back then, I was doing regional banks all the time, and they're not the easiest to work with, and they certainly don't give you the best terms. So that's at least what I found out. Some are fine to work with, but they take a long time to develop a relationship. And then,
right.
Once you get into the relationship, there's not much there for you. That's what I would say. That's definitely something that's gotten better, as well as other types of acquisition avenues to buy homes, like, there's Renter's Warehouse or Roof Stock. You can buy them just off of the MLS now with tenants in them to make that process a lot easier. I was buying almost all mine with no tenants in them. Had to rehab them and put the tenants in. Now you can do that. Banks like that better because you've got cash flow already in there. You don't have to do as much. And so that can be an efficient acquisition tool as well.
Right. Yeah, I mean, for sure. And it sounds like you're kind of, because you're in the Austin area, right?
Yes. I'm in Austin, but
you're kind of driving all around. You're kind of driving all around to find properties, though, right?
Yeah, absolutely. So, like, I've got multiple handfuls of markets, and I don't feel compelled to own a rental within 20 minutes. That's kind of, in my mind, that was kind of a 1980s, 1990s model. I tend to be more influenced by the surrounding area, the asset, the tenant base, and things that are positive, what's going on around it, and I'll figure it out. Because what I've done, and I feel like I'm lucky, is that I've got a good property manager that can handle it in all different areas, and so I feel like that's a very big plus. And so as you're growing, if you can search for a property manager that has the ability to scale in different places, that's going to be a really, like I said, a very big plus.
Is that who are you using? Renter's Warehouse?
No, I've got a personal guy I use named Tom Gilchrist. He's a broker realtor in Dallas, but he does do property management, and he he grew up in Texas, so he knows it well. He's been in real estate since the 80s, and so his son actually is going to be moving to Austin, and so he's got family in Lubbock, which is another market that I'm looking at. It's just, and he makes it down. It's a 2-hour drive to Temple, but he does it 4 times a year. It's not terrible.
Right.
And I meet him there. And so you can make all that work if you're kind of smart and about it, and but I do think it's worthwhile to have that one key point of contact that can cover a lot of area for you.
Right. Well, I mean that sounds good. We we actually moved all of our properties to Renter's Warehouse as of last week.
Oh, really? Okay.
Yeah. I'm not even going to get into the whole ball of wax, but I'll tell you that we ended up having a very large dispute with our last property manager, and I feel like the most important, how would you say, lesson behind it is if you're going to let someone else kind of operate with impunity and rehab your properties, it's best to agree on scopes of work and budget limits prior to letting them start swinging hammers.
Yes, they will go over all the time.
And that's the crazy thing is in 4 or 5 years, we never had that problem. As a matter of fact, this manager was always under.
Wow.
And yeah, and all of a sudden, this one project came in at 3 to 4 times what we were anticipating, and yeah, I don't mean 3 to 4,000. I mean 3 to 4 times. So the bill had 6 figures in it, and it just, I tell you, that one house has just ruined a 20-year relationship. Because
oh man, I'm sorry to hear that.
Well, it's just life, it was funny. My kid was here when a certified letter was delivered from the manager. He was, Dad, what's that? I said, someone's going to sue us. And he's like, oh, wow, Dad, we're going to get sued. And it's like, yeah, well, it's just part of the business. I mean, unfortunately. But it's interesting. I mean, even on this issue where the other party went and filed a mechanics lien on 3 properties with bad accounting, with numbers that don't consist, or aren't consistent with the other numbers that they had sent us. It was literally so bad that the manager sent me a letter in December that said, I am not willing to discuss the quality of the work. I demand immediate payment. And it's like, okay, well, because one of the problems on this house is we were too hands off, and they were remodeling it, and it took, forever and ever and ever. And they finally, quote unquote, got it on the market. And it was a nice house up in Farmers Branch, Texas, that we were trying to, we thought it would rent for $2,000 plus. And all of a sudden they're like, oh, well, we're on the market at $1,500 or something like that. And my wife and I are like, what? And then we start seeing the feedback, and it was September 10th, to tell you how long this has been going on. One of the feedbacks came in as, it looks like the house is going to fall down, the foundation still needs work, et cetera, et cetera. But she forwards the email to me. She's like, you need to go look at this. And it was very much not a recommendation, more of a demand, because we had been talking for a week or two, like, something's going on there. Because the manager was like trying to tell us, oh, we may get $1,450, and we're like, what? Well, anyway, and Craig, that like we're real proper with RCN. It's that cash flow number is very important.
Oh, you got to have it. You got to have it. Yeah.
Yeah. I mean, because it was going to really hurt our refi, and then just completely just jack up our numbers on the whole thing. So after that, I went over there on September 11th, and I mean, it was just a train wreck. The house still had 2 to 3 inch foundation variances in the middle of it. There's paint peeling off. The cabinets looked like my 2-year-old put them in. I mean, it was just awful. It was just an awful rehab. So I texted him, tell him to take it off the market, and I still get the text messages. By the way, I used to delete text messages. So another little tip is like, make sure you save all of your text messages.
Oh, absolutely.
Because I started doing it probably in March or April, and it's just been, it's huge. Because I've got these text messages where he's like, I'm so embarrassed that we did that. I'm so sorry. No doubting you. You are right. We'll get it fixed. Well, more than half this bill that this guy is claiming came after I got over there, and they made him redo a bunch of stuff. So that's why the manager, quote unquote, doesn't want to talk about the quality of the work, because, they screwed up, and I wanted to sit down and meet with him and say, hey, should I have to pay for the foundation twice since the first guy didn't do it right?
Yeah.
But he won't even have that conversation with me. He decided that he was just going to take the legal route, and he said if I'm going to settle, if I'm going to take a hit, a judge is going to tell me what the hit's going to be. And you're just like, all right. Because if it was $3,000 or $4,000, then my wife and I probably wouldn't. We probably opt for the less painful road,
Sure.
But when you're talking a $120,000 rehab on a 1,600 square foot house, that I had $25,000 budgeted, You know,
Wow. Wow.
yeah, I mean, right. I mean, yeah, I mean, you're literally talking about a 6-figure differential. And yeah, there were termites. Yeah, we ended up replacing the panel. Yeah, we had to get permits. Yeah, we had to, you know, we decided
to build
a fence.
$10,000 all in.
Well,
and
then, yeah, we decided to rip out the cabinets, and yeah, we decided to rip out the tile. So even Jennifer and I was like, you know, if we could have a conversation with the guy, and it ended up being a 40, 50, maybe even 60, because we did put on a brand new roof and all this, and it's got granite and all new cabinets, all new tile. We ripped out all the shower enclosures. Okay, maybe even 60 on a bad day, but $125,000 for a 1,600 square foot 322 brick pier and beam house in Farmers Branch. I mean, I just built a 1,000 square foot house on a slab with brick and stone, and another 5,000 square feet of flat work for $120,000 behind my house. So, yeah, so that's been, you know, and the hardest part about this business, right, is we're all alone, you know, and so
right.
like I got that letter on Monday last week, and I'm telling you, it ruined my entire week. Until we've got this Airbnb we're working on down in San Antonio, until my wife's like, we had a problem down there, and she's like, hey, you just need to go down there on Wednesday. And I was going to drive down and back on Wednesday because like this, now we got to change property managers. It was just a tough freaking week, you know? But it was nice of her on my way down there. She called. She's like, look, I don't want you being exhausted. Just stay the night down in San Antonio. Take your time. Get the house lined out and come back. And so I got lucky. The next day I was able to stop at Franklin's Barbecue in Austin on my way back. Well, Craig, you're in Austin. I'd been driving by for probably 10 or 15 times, and every time the line was either 3 hours long or it was already sold out. Well, I pull up at 12:30, and there's only 10 people standing outside. And so I just, you know, park my truck, run up, stand in line. About 10 minutes later, the line checker comes by, and I was like, so what are you going to be sold out of? They were like, nothing. We're going to be fine. And I mean, it was like the perfect thing. So I stood in line only like an hour, but I didn't have to get there at 6 or 7 a.m. like everybody else does. So I really hit the jackpot. It kind of made my week better, but then I got back and, you know, I spent all day Friday scanning leases. Well, I had to go to the property manager's office because they were kind of archaic and pick up a box full of leases and applications and spend half my Friday scanning those in and half my Saturday organizing them in a Dropbox and filling out Renter's Warehouse spreadsheet and all that. And all of that.
That's painful.
You know,
yeah.
But
well, the good news is that, you know, once you get past it, I'm sure Renter's Warehouse, like no property manager has like the perfect. None of them are perfect, but yeah, I mean that's an egregious story, and hopefully it gets rectified pretty soon. I don't know all the legalities of it. Yeah.
It will, and you know, I'm not trying to complain, right? It's just, it was just interesting, you know. I mean, I always try to handle everything in a very personal nature in this business, and not hide behind contracts and, well, the document says this, but you know, at the end of the day, the management agreement I have with this guy says that any expense over $1,000 has to be expressly and specifically approved. And I try to have a rational conversation, a reasonable conversation. You know, that's in all this. I'll tell everybody, after talking to all these attorneys that I have in the last 2 weeks, the key thing that seems to be reasonable. What is reasonable? And the courts want to see that you are acting reasonably, and that that your actions are, you know, aren't manipulative, or you know, they don't like seeing people that are trying to get over on someone. And
yeah,
I feel like, you know, and oh gosh, if anybody's on the call, if you have the Masterclass app, there's a new one out. New part of that Masterclass is an FBI, a former FBI negotiator, Chris Voss, and it's like I don't know, it's probably 3-4 hours worth of audio and video, but he talks about negotiating techniques and, you know, even ways to use email to your advantage. And so, like, little things like, Chris or Craig, would it be ridiculous for us to come up with a solution this week? You know, something like that. Like, it's very, if you're dealing with a rational person, they think, well, no, it's not ridiculous, but, you know, and you're more likely to kind of move it, you know, to the next stage, you know. It was really interesting. It's all about, like, hostage negotiation and things like that, mirroring, and I've already used it a couple times in my house buying, and I've used it in some of these email negotiations. I highly recommend it. It's Chris Voss, former FBI lead hostage negotiator. It's a pretty cool little master. Yeah, it is. It is. Looks like John Thompson joined us. Hey, what's up, John? Do I need to unmute you? Oh, you got it.
Hey, Tim. How you doing?
Man, I'm fantastic. How are you?
Good. This is the first call I've been on. I was just sitting here checking emails and it popped up, so I was like, hey, man, let's get on.
Yeah, and I actually, at Craig's recommendation, we've got a VA that I'm training this week to help kind of streamline these calls and make sure everybody's aware of them, and, you know, send individual emails instead of group emails, and just try to help make sure people know about them, because we're going to start having 4 to 6 a month, and just, you know, you want people to hop on when they can. So I've got John Dowdy on. I've got Craig Foster on. Guys, this is John Thompson. He's another Dallas investor. John, what you working on these days, man?
Buying apartments.
Are you full-fledged into that now?
Yeah, I'm selling my houses and trying to buy more apartments. So
Did you buy any yet?
I'm driving to Beaumont today to look at one. I've got a Fort Worth property and a Little Rock property I've got to look at next or after that this week. So I've got offers going out, but I haven't bought anything.
What made you make the switch, man?
You know, my primary focus in life is just income. So all I want is income. And I've been buying houses for a long time, and it's so hard to get momentum buying houses. You know, you have to sell 4 houses to keep one house, you know, just to be able to afford to keep the one house in your profit scheme, right? And it got to where I could only buy 4 or 5 houses a year. You know, I don't like to have big staff and stuff like that. So I just kind of do everything myself. And most houses I can do on my own is, you know, 20, 25 houses. So comfortably anyway. So I just started doing the math where I can only pick up 5 doors a year doing it the single family route. And I started thinking to myself, well, why don't I buy 100 at a time, you know? So
right.
I started, you know, a couple of years ago, I started looking at what it would take to be an apartment buyer. And so here I am. I'm still trying to figure it out, but I'm a lot closer today than I was 2 years ago, of course. But I just want to have, you know, the only path to wealth is income. So if you don't have assets that are producing income for you, then you're on the wrong path, I think. So that's my new focus now. It's just looking at apartments and trying to buy apartments and trying to gain that income foothold for my future.
Right. So you think, I think I saw on Facebook, are you doing like some syndications? Are you going to try to just be on your own per property? Are you looking, tell me more. Like, are you kind of, I know before you were looking like Wichita Falls, Little Rock, kind of some of the outlying areas of Dallas and the I-30 corridor. Where are you looking, and kind of you doing it on your own? You looking for investors? What kind of give me some deets?
Yeah, all that. So I've got a partner. So in apartments, you can't just step into that. You have to have if you're going to do large apartments anyway, you have to have someone that has experience, that has net worth, that has liquidity, on the millions. So that's not me, of course. I mean, I have a track record with my single family business, and I've always made money there, but I don't have this high net worth, high liquidity. My bank statements just doesn't have that stuff. So you have to have partners that have those things. So I'm partnered with Corey Peterson. He's big kahuna out in Phoenix, and he's got about 95 million under management right now. I think he's just picked up another one, so he might have gone over 100 million. So he's kind of, mentoring or partnering with me to kind of get me those components that I need. And then as far as target area, I'm looking at Texas, Oklahoma, Arkansas, a little bit of Kansas and Missouri, really, maybe some Indiana. So kind of that center, just north of us, area, and then all of Texas, of course, And then what was your other question? Yeah, I am. So I am looking for investors as well, again, passive investors that may want to do some deals. Dentists, doctors, someone who's a busy professional that just can't find the time to do the work to get into real estate investing. Those are kind of be people that I'm interested in talking to, really. But we're looking at 100 plus doors, so really between 100 and 250 doors. It's about maybe, $6 to $15 million properties. And, it has to have nice cash flow, and they're usually B and C properties in C and B, or B areas, B and A areas, if we can get them. So you're trying to look for those properties that people have owned for a while, that they just need some love, just like any of the properties that you buy on the single family side. So it's kind of the same.
Right.
It's kind of the same business. It's just a couple extra zeros is really what it is. So, the offers that I normally make are 80,000. The last couple offers I made were almost 9 million. So it's just a matter of scale. It's really the same business, just a matter of scale. So
yeah.
Did that answer your question?
Well, I mean, it absolutely does. I mean, I know a lot of people make that leap, and some people come back off that leap. Some people, I think I was talking to one guy. He had about $3 million in a 1031 that he was trying to place back into single family, because he kind of went through the whole cycle, right? He had in 9, 10, 11, he had been buying single family. And then in 12, he got out of single family and got into multifamily. I want to say like in 13. And then like in 18, they were kind of at that 5-year mark when the financing had, balloons and adjustables and all that. And he was a passive investor. He wasn't a passive. He was actually one of the co-sponsors, but he wasn't the lead sponsor. And they decided to sell it to get all the investors their money back and have the big returns and all that. And so he was like, he ended up walking with like $3 million, and he was like, the problem is my income's gone now, and I got to go place this money. And he's like, I just don't want to do that anymore. So it was kind of an interesting thing. I think he put like 50% down on about $6 million worth of houses. $6 million in purchase price, because we financed him on the underlying balance. And so it was like $3 million down. It was like $3 or $4 million in leverage. And so it was like, I want to say is $8-ish million in property. And he said, I'm just going to pay these down, and then I'll never have to sell again. I think it was an interesting take on multifamily I'd never considered before, because a lot of those syndications refi or sell, because that's kind of part of the business model. So, but hey, if you can ride the income bubble up and cash out, then maybe your single family looks a little different.
Well, the mostly syndications that the guys that you'll see today, they're proponents of that 5 years. That's 5 year process, right? So it's year one, you fix the property. Year two, you fix the tenants. Year 3, 4, 5, you progressively raise the rents. And then in year 5, you cash everybody out. You have to sell the property in order to pay everybody off. The way I'm structuring it is I can do that. I do that same process. However, I'm able to refinance, pay out my passive investors, and then keep the property into the future. Because, again, my goal is income, right? I don't want income for 5 years. I want income for 50 years. So
right.
I'm structuring my deals where I have enough room to get the passive investors out, keep the property with my 1 or 2 partners that I have in the deal, and then just generate that income forever until, whatever comes up. So most of the guys, they're offering these packages to their passive investors that are so crazy that they have to sell the property to get everybody sorted out. And then you have nothing to show for all your work for the last 5 years, other than I guess $3 million. But, for me, $3 million is less important than income every month. So,
yeah.
Anyway.
Well, cool, man. I'm glad to hear you're doing something different. It's something I've always considered. So, I hope you keep sharing. Andy, what's going on, man? I'm going to unmute you.
Hey, Tim. Nothing much, man. Just put some offers on places over the last 3-4 weeks. Unfortunately, nothing's come through. They've either, taken other offers or just we couldn't get pricing to where we needed to be for it to cash flow the way we wanted it. So we just kind of balked on it. Other than that, that's about it. Haven't picked up anything since the last time we spoke. I've been looking, but I just haven't found the right deal yet.
Those offers that you're putting out that nobody's accepting, are those flips or are those rentals?
Well, one was going to be a rental, and 2 of them were going to be flips. So that's I picked up this one company that what they do is they do analytics on properties. It was some guy, somebody I knew that I used to do work for years past. So he came up with this new idea of stuff, and it's called Click Invest. So
yeah,
I signed up for it. I just don't know if it's what I need out of it, but I figured I was going to give it a try because nothing else was working for me right now. Everybody I talked to, real estate wise, they're all kind of sitting there going, real estate agent wise, yeah, we got stuff, but then you talk to them for a week or 2 and then they just kind of fall off the handle. So this, platform was stuff that they send to you with stuff on there. It's not all perfect, but I figured what the hell, I'm going to give it a shot because nothing else is working.
Right.
So put some offers in and stuff, but nothing's panned out yet. But definitely getting more aggressive into it.
Hey, I've been meaning to kind of reach out to you, and I think maybe this would be a good topic of conversation. You're in with all those asset managers and everything, and when we were at the meeting, you kind of hinted like you felt like volume or foreclosures or REO inventory was going to increase. I mean, what are you hearing on that front?
You know what? I keep hearing the same thing. Oh, it's going to increase, but it's been so quiet. I mean, since September, October till now, it's been very quiet. And the brokers I'm talking to are all saying the same stuff, man. They're just sitting there going, I don't know what's going on, but we've been really quiet. Now, they've had a little uptick in the last month, so we've seen some stuff come through for us. we're bidding. We're still bidding, but we're not getting stuff. The thing is, maybe it's a little better. I mean, we're down volume-wise, but at least we're bidding less, but we're getting more approvals, meaning ratio-wise. In the past, we're probably 18%. We're probably about, 27, 28%. So
just so everybody on the call, just so everybody on the call knows, Andy does both. He buys houses, he flips houses, he rents houses, but he also has a large property preservation, asset management kind of he fixes foreclosures for banks in not Chicago, but where, Andy?
Yeah, Chicago area.
Yeah.
So the 8 counties of Chicago, around Chicago.
Right. So when you're talking about these bid ratios, you're talking about the amount of repair bids you put out and what gets accepted.
Right. Exactly.
All right. Perfect. Sorry, I didn't mean to interrupt. We got a couple guys on the call that probably haven't met you.
Yeah, great. So basically, we just got one that, it's our largest one yet. It's awesome. But at the same time, I'm looking at all the other bids that we're giving out, and now we're starting to get, the only thing that I'm seeing is we're starting to get stuff from these outside investment companies. Some of them are hard money lenders that have lent money out and to flippers, and they've gone belly up. So, they've been introduced to us as, a company that can handle their volume in terms of stuff that they've had to repossess from flippers. So we're giving bids on that, but, to this point, once again, it's just been all bids and nothing else with those guys. As far as volume is concerned, it's been kind of quiet. My clients, the brokers I deal with, they've been slower. They've had a little bit of an uptick, but it's not to where it was. And then through the default publications at ANTOM, ATTOM publications, I just read their last article that foreclosures are down again. So I'm already kind of anticipating that we're going to have a little bit of a downturn in the office on that part. So that in my brain just tells me I've got to do, to keep my income levels where I need them to be, is either I need to do a couple flips, so get into the flipping market. But overall, my primary goal is to get rental market. I want to get, some rentals to just have that passive income and not rely solely on, on flip or my business or whatever it might be. I want to have stuff that, it's there. It's the couple that, the several properties I have right now. It's cool because it's paying my daughter's college, so I don't have to worry about it. It's like, okay, bill's in, great. I write a check to there, to that, so I'm looking at it going, I want to have it where I can buy everything I want off of rental income. Right. Is my goal.
Man, isn't it all right?
So I can learn how to barbecue. I'm doing barbecue, man. You're gonna teach me.
Oh man, I'm not much of a teacher on barbecuing, but I sure do like to do it.
That's cool.
I'm actually, today's big task on that end is my youngest son's school is having a dad's chili cook-off today, and he talked me into entering. And I'm not a good cook. I'm a great eater. I'm just not a great cook yet. So it's going to be an interesting day to see how this all pans out. That's my big task for the day. Is I have to make it. I put the chili on last night, so hopefully it turns out being good.
I'm sure it will be.
But yeah, so I mean, the foreclosure market's one of those things that I just don't know. I keep hearing that it's about to tick up, and I keep hearing that the global economy can't keep going up, and I keep hearing that interest rates can't stay low, and I keep hearing all these things that make perfect rational sense, but I'm just not seeing any signs of it coming to fruition. So
yeah. It may not be this year. I mean, it might be, we might be 18, 24 months out. Everybody keeps talking recession, but I've been hearing that for, 3 years already. So
I know, right?
So I think once we do hit it, of course, that's when my business will go back up. But, for the last several years, I'm seeing, single digit to just above double digit decreases in my volume of what we've been doing for like the last 3 years now. So
right.
I just got to look and see what I can do to generate it to get it back to, where I want it to be in that aspect. But it's, like I said, in the same time, I like that rental market. I like getting that check every month. It's awesome.
Amen. Amen. Well, hey, man, thanks for sharing. Victor, looks like you joined in. Welcome to the group.
Thank you. Can you hear me okay?
Yeah, I hear you fine.
Okay, cool. Yeah, I do a lot of that auction stuff, and what I've been seeing is I think a lot of them are getting canceled. A lot of the ones that used to end up getting called, they're getting canceled beforehand. So I think the lawyers are getting real aggressive and, getting a hold of people in advance and giving them that 3-month reprieve with the bankruptcy, right? And so I was thinking maybe it would be a good idea to try to get that list of folks that, got canceled, contact them, because they might be good candidates, on the side, basically just not going through the auction, but going direct, and trying to reach out to them and say, hey, that's great, you've got a reprieve, but a lot of them I see that they come back. A lot of these same addresses come back and show up on my database and say, oh, well, I already drove that property. That was 3 months ago. So, that's all they get when they file for bankruptcy is that 3-month reprieve. So anyway,
right.
just trying to figure it out myself.
Well, Victor, we've got a couple guys on the call. Why don't you introduce yourself? You're a new member. Tell us kind of what market you're in, what you're doing. Love to learn more.
Yeah, thanks, Tim. I've been in real estate since about 2012, and I first started out. I got laid off from the corporate world. I had a pretty good job with some tech companies, and after I got laid off, I said, I really have always liked the real estate market. My father was a builder. Growing up, watching him build houses, and so I decided to try to do that. So I got my real estate license and went into real estate as a realtor, but I didn't like it. It didn't fit my personality too much. It was a little bit too butt kissy, I guess you could say, and I don't know how else to put it, but it just kind of wasn't working for me. So I decided to go for the investment side, and I think I've only done the auction stuff for about 4 or 5 years, and then
right.
Of course we have tried to do a lot of the tax sale stuff, contacting people pre-sale, but I've had a fair amount of success, and I've been real lucky because I haven't taken my hard lumps. I mean, I know that could happen, like you say, Tim. I listened to your call the other day. You can lose money, and you just have to take your lumps when you do. But I've been fortunate enough that haven't had to lose any money. We've had some deals that didn't make a lot of money, but haven't lost any yet. So I've been focused on just trying to get onesie twosie. I'd like to grow my business. I recently got a little bit of a larger credit line. I didn't have much of a line before, but my line's gotten a little bit better, and so I'd like to just learn how to scale it a little bit, and I'd like to eventually have a bunch of rental properties. I don't have any now because I've just been focused on trying to, build cash flow, build my kitty basically, and put money back into the line and back into the business. But my goal is to eventually have a bunch of rental properties that I can keep over time. But right now we're still kind of in that mode where we renovate and we either renovate or we wholesale. If it's a job that's too big for us, we wholesale.
Yeah.
Because I'm not that experienced. I really, I like to think I am, but I'm really not. So, I have a lot of knowledge and experience about infrastructure inside of a house and what's bad, what's good, all that. But if it just looks like it's going to take me so much time, because I feel like if something's going to eat up all my time, I could be doing other stuff that might make me more money in the meantime. So.
Man, if there was ever a statement said on a conference call that I agreed with, it was that one right there, man.
Thank you.
Well, I mean, knowledge and experience many times comes from spending your time on things that you probably shouldn't have. And we're finally, after 20 years of Tim Herridge being super aggressive and crazy, at a point to where if it's not the perfect deal, we just wholesale it, let it go. Even if, I actually had a wholesale that I've had to bring $3,000 to close. I lost $3,000 on a wholesale. Cause I don't write bad contracts, right? I close on everything, but sometimes you find out you're in a bad deal and it's worth, a little bit of money just to not be involved in it. We got this one that closes this week that is on Martinique over in Dallas, and I thought it was going to be a home run deal, but I was wrong. So we're only going to make like $7,000 on it. But it's like I told my acquisitions team, I was like, $7,000 on a house that I don't want to own is good with me. Well, I'd have rather made 30, but I don't want to own it, so I'm just not going to. Whereas probably 2 years ago, I would have closed on it and tried to make it work and then been upset with the outcome.
Yeah. Yeah, we've had those that we just didn't want to mess with, too much, and we were able to get out and just make $1,000 or $2 on some of them that we bought at auction, and then there was issues after the fact. Like one house we found that they had been producing drugs inside the house, which creates a whole bunch of problems when you're going through, say, inspection and so forth. So, that one, boy, we had to get out and just cut our time and losses there. And fortunately, I thought we were going to lose money, but fortunately, we ended up making about $1,000. But it was worth it to get out fast. You just never know what you're looking at. That's the one challenge with these foreclosures. I like to drive every property. And I know that's a real time-consuming thing, but I just won't take the risk, and I have to go see it myself. If I don't see that house and I don't evaluate it myself, and I can't look at it and say, does it have good drainage? Does it have a good roof? Is it straight? Because you can tell a lot by just looking at a house from the outside, but I've gotten used to seeing clues about if a house is trashed inside, even though I can't go in there and I don't want to walk up to the window. That's a mistake because people have dogs, they have guns. You never know what you're up against, right? So I just like to drive them all. It does take me some time every month, but I build a list based on my criteria, and I try to hone in on our target market. Has recently kind of shifted. We used to go for a little bit more expensive properties, but now we're going for a little bit less expensive and trying to go on the low end market because there's a lot of people out there that put money under their mattress. There's still people like that, and those people will come to closing with cash, and they will, buy a $100,000 house from you, just like that, and you can close fast, and the closing costs are cheaper. So we've kind of shifted our focus to those lower end properties, but that brings a whole new set of issues because you have a lot more potential problems with a house built in 1952 than you do with a house built in 2002, you know, and that's what we used to buy, is those newer ones that were like around 150, 175, and then, you know, go ahead and fix them up and retail them. But that takes a long time too, with that 30 days for people to get their mortgage straight. And you know how all that goes, guys, that are in that foreclosure deal. But just anyway, long story short, it's hard to tell. I like to drive those houses, and it's important to me to do that because I can see if the guy's got blinds that are trashed, for example, you know, if the blinds are trashed from the outside, you know, they got big old dogs in there that are barking and tearing out the blinds. That's a clue. You know, the inside's probably pretty trashed. And then, of course, if there's a bunch of cars in front of the house, there's a lot of little clues that I've gained knowledge about over the years of driving these houses. And so I feel like I've got a good feel for being able to tell if a house is going to be really in bad shape inside. And that doesn't matter sometimes. If you get a deal's a deal. But I mean, I'll put a criteria down before I bid or before I try to go after a house that says, hey, you know, this is buy it cheap or don't buy it at all. You know, and that's hard to do at these auctions because there's a lot of rookies that come out and they overspend. They get excited, maybe they got some money or whatever, and man, they will bid that thing up to the point where there's just nothing left. They're going to get eaten alive, and then those people never show up again, right?
Yeah. So Victor, you're in the Dallas. Are you mainly at the Dallas auction? Or are you at the Collin auction? Where's kind of your?
You know what? You know what I do? I go to Tarrant. I've been going to Tarrant the whole time. I've been. You know, it's a little farther away. I actually live in downtown Dallas. In a building. I used to live in a house in Richardson, but I moved downtown, and so I've got good access to the highway. I can just jump on 30 and be, you know, in Arlington or Fort Worth in 20-30 minutes. So it's not too bad, and I feel like it opens up a little bit more opportunity for me out there than in Dallas. Dallas is crazy sometimes. It's really crowded, and of course there's a lot more properties too. But I like Tarrant, and I've been out there for a while.
And so you're buying, especially now in Tarrant, right? Obviously, there's kind of that lower price point home than if you just look at averages of, you know, the kind of median home price. Could you just, you know, kind of give everybody? I mean, you've got, you know, sounds like you do a lot of flips. How many rentals do you have?
We don't have any right now. Now we have a partnership with my business partner's sister. Actually, you know, they kind of do the Dallas auction. They've been doing the Dallas auction for a long time. They've got 80 plus rentals, but we, right. Like I said, we have been focused, and they've been doing this for like 30 years, and we just started. So, you know, 5 years ago. So we've been, like I said, building up our, you know, cash and trying to get that. You know, get that critical mass where we now have some opportunities where we can say, like we did just recently, we really debated about the property that we bought in Arlington. We got it at 65, okay, and we see a lot of like new roads being poured, and that downtown Arlington area is getting like you know, like the Oak Cliff area, okay, Bishop Arts, it's getting like that over there where there's a lot of cool little stores and cool bars and stuff like that are being built not too far from the stadium, and Cowboy Stadium. So we debated because it's right by UTA. We thought, man, you know, this would be a hell of a good rental because these students will come over there and rent that thing forever, right? So, but we ended up going ahead with just sticking to our plan because we're still building our cash, you know, still building up our cash so that we have more opportunities to do bigger and better things. And we're thinking about, you know, doing some development at some point where we can build, you know, 3 or 4 at a time. You know, that's kind of the vision that I have. So yeah, we don't have rentals at the moment.
Okay, cool. Well, hey man, it's great to have you on board. Sorry about the little mix-up with my technology this morning, but it's great to have you on board. Look forward to kind of working with you more. Big Kenny, welcome to the call.
What's up? I got kids
Still
in the
there?
background. I'm trying to keep it muted.
I think most of us have kids in the background, so it's all good. So you're buying notes now, huh?
Yeah.
Well, cool, man. Yeah, so I saw Kenny. He created himself a new company last week. Now he's buying notes. I think that's interesting. It's as I look across the landscape of like all the investors I know, I feel like everybody's making some sort of change or business addition. I mean, and I think it's because overall, those of us specifically that have been doing it for longer than 2 or 3 years are feeling some discomfort, either with our current strategy or the market conditions. I think everyone on this call has said that they're talked about something new they're doing. It's interesting to me. It's concerning to me. It's also exciting to me. It's kind of, I look at it all the same, because, with me having always been kind of a wholesaler primarily for income and keeping my rental properties, wholesaling has definitely become a beatdown because you're bidding against 95 yahoos every time you walk into a door. I've thought about doing what, John Thompson, who's, I call him Sean, who's on the call, what he was doing, he was branching out to Wichita Falls and Little Rock and all these secondary and tertiary markets. But now sounds like that was enough of a beatdown that he stopped doing that and he's looking at multifamily. Kenny, you build, you buy notes. I saw you were thinking about doing some multifamily in Florida. What are you up to? What all are you up to today? I should ask.
I mean, it's been probably like a year of me coming to the conclusion that I would really like to own debt more than I would like to own rental properties. So I've kind of been working on that for like the last 6 months or so, and finally just try to start pushing it out. I like the aspect of doing sub-twos, owner financing them back out, and then looking for some non-performing notes. So that's what I really want to go towards, and just creating that debt and selling it back out and collecting the monthly net on that versus having to deal with tenants all the time. Right. If I could, I would like to try to go towards banks and try to find some, REO construction type projects, because that's obviously what I'm good at on the construction side of things. So if I can get into some banks and get some REO stuff that they're owning, maybe somebody defaulted on construction loans, I think there's a good opportunity there as well. And then I can control everything.
Yeah, you ought to hit Andy up. I mean, he's kind of got that going in the Chicagoland area. I'm sure somebody's got to have something down here. And that's a good point. With all of these hard money lenders and banks that are just overextending themselves like crazy in the residential market, same thing we saw in 05 and 06, there's got to be some defaults on some major construction projects that either I guess you lead in with the whole let me finish the project for you angle. And then, the backup is, well, I could just buy it off your books.
Right.
Andy, you got anybody down here that he should talk to? Andy may have left the call.
The last 2 years, I've kind of been like dabbling and doing hard money. And while it's good, I think my yield would actually be better owning the debt. And I'm not having to sit there and hustle for new loans every 3 to 4 months.
Yeah.
Or
the only thing I can't reconcile against on the owner financing or owning the debt is it's a declining income stream with a declining asset base. And it was great in 08 and 09 for me because we couldn't, we had all those bad rental properties and we had to do something with them. But by the time 18 rolled around, we had lost all the appreciation, right? Somebody else got it. And they had paid down their note enough to where the majority of their payment was now going to principal. And you just kind of looked up and, I mean, I was 38 at the time, and it's like, holy crap, I'm going to be 55, 56 years old and have no assets left.
Right.
Unless I keep working and keep replacing them, keep working and keep replacing them. And, I don't know if that's the right thing to do. I mean, because it is good income. It does create an alternative sales channel. It's liquid. You can, I own probably 15 or 20, I don't even know the number, partials right now that one of the things I've done a lot of is buy a house, fix a house, sell it on owner financing, sell the first, enough to pay off my underlying, and then retain, either a partial or a second. And, that's great cash flow, but, it goes away. And then what are you going to do with it?
I think there's got to be a good percentage of having both, having the notes, so you're still collecting on that, and also owning property, whether it's or single family, because you are going to collect some of that appreciation as well. So I don't want to be prone to only doing one, or like to have both aspects of it. So I got extra cash coming in, I can put it into a multifamily, so now I'm still owning an asset versus just the debt payments. Because you are correct, because those debt payments are going to trickle down. You're still going to have to go and buy more 5 to 10 years from now and continue that cycle. Because it's not really creating an equity position or longer term wealth on the debt unless you keep buying and keep buying. Whereas you could have an actual asset sitting on the property, a multifamily deal, and if you're holding it for the long term, the value is going to keep going up.
Right. Well, for that, I guess that's the key is if you're just trying to get out of the whole tenant and toilet issues, and if you got multifamily, then you got on-site management, and in theory,
Right.
you're not dealing with maintenance. So you're generating income from owner financing, and then you're creating wealth with your multifamily.
Correct. And somebody else is managing, those multiple doors versus single family. I know you can still have management on it, but the headache seems to be a little bit higher than when you have them all consolidated on one property.
Right. Huh. It makes sense. I guess it all comes down to, with all of us, what we want to spend our time doing or what we feel best at. Shoot, guys, it's almost 20 after 9. I know we got started a little late. John, you get the trophy. You've been on for an hour and a half, man. So you get a trophy. It's good to talk to everybody. I'll post this out, and I'll do better at getting these call schedules out in advance. I've got, like I said earlier, based off of Craig's recommendation, I actually got a VA that came on. I'm training this week just to handle scheduling for this thing so that nothing's last minute and everybody kind of knows when something's available. So hope everybody has a great week. Call me anytime.
All right, y'all have a great week. That's good.
All right, thanks.
All right, thanks, guys. See ya.
All right, bye.